Rate increases. Rate increases. Rate increases. Rate increases! That's all you see when you read about long-term care insurance on the internet. It's true. There have been a lot of rate increases on long-term care insurance policies, but that's only half the truth. I'm Scott Olson, co-founder of LTCshop.com, and in the next 3 minutes, I'll share with you the other half of the truth, including details about one company that has had stable long-term care insurance premiums for over a decade. Now, when you read about long-term care insurance rate increases, there's a lot of scary stuff, but they always leave out one vitally important piece of information: this date.
January 1st, 2009. That's the date the state of Montana enacted the Rate Stability Regulation. What you've never read before, and what you've never been told before, is that most of the rate increases in Montana have been on long-term care policies purchased before January 1st, 2009. Policies purchased before January 1st, 2009 are not protected by the state of Montana's Rate Stability Regulation. Only policies purchased after January 1st, 2009 are protected by Montana's Rate Stability Regulation. Over 99% of the rate increases in the state of Montana have been on policies purchased before January 1st, 2009. Less than 1% of the rate increases have been on policies purchased after January 1st, 2009. The information in this video is based on rate increase data published in December 2018.
The rate increase data is public information. You can download the spreadsheets containing the data. Just go to ltcshop.com and click on Rate Increases. Now, why is the Rate Stability Regulation working so well? Because the regulation flipped the profit motive. We all know that insurance companies want to make profits. Under the old rules, a long-term care insurance company could request a rate increase and increase their profits through the rate increase. The Rate Stability Regulation changed all that. The Rate Stability Regulation forces insurance companies to lower their profits if they seek a rate increase. Now, how many insurance companies want to lower their profits? None. That's why this regulation has been so effective. The second reason this regulation works is that it allows the insurance companies to keep higher profits than they could under the old rules. What? How is that good? It's good because they can only keep the higher profits if they keep premiums level. The insurance companies are penalized for raising rates, and they're rewarded for keeping premiums level. So let's look at how well this has worked using one of the top-selling long-term care insurance companies as an example.
This company is rated A+ by AM Best and has been in business for over 100 years. The Rate Stability Regulation became effective in Montana on January 1st, 2009. People who purchased this company's long-term care insurance policies before the Rate Stability Regulation had an average rate increase of 38.6%. For everyone who purchased this company's policy after January 1st, 2009, there have been no rate increases. This company has had stable long-term care insurance premiums for over 11 years.
But the premiums must be unaffordable. Not really. Check it out yourself. You can get an instant quote for this policy just by answering a few questions below. Thanks for watching.